वीडियो भी करना। Yes. हाँ, इसको बाद में वहाँ पे लाइट क्या रास्ते की और लाइट है ना एक वो येलो कलर।
Hello everyone. We will be starting in next 2-3 minutes. Uh, yep. Hi everyone. Good morning, good afternoon, and good evening, everyone from different parts of the world for this exclusive session on decoding budget 2025 and how it impacts our NRI community. My name is Abhishek from SB NRI. I look after the investment sides, and interestingly, in the last few years, if there has been one economic event which has played a really important role in defining our economic policies, especially for retail investors, is to look at the budget and how markets shape up due to the policy changes figured by the FM of India. So this year budget was one of the most sought after and was one of the most awaited budget in the last decade. So today we are honored to have a stalwart from financial world, Mr. Nilesh Surana, Chief Investment Officer at Mirae Asset. He joined Mirae Asset in 2008. In his capacity as CIO, Mr. Surana spearheads the research and the fund management function. Mr. Surana manages Mirae Asset ELSS Tax Saver Fund and Mirae Asset Large and Mid Cap Fund. With 32 years of experience in managing investments and navigating economic shifts, Mr. Surana is the perfect expert to help us break down the key takeaways from the Union Budget 2025 and its implication on the investor base. Welcome, Mr. Surana, to our session.
Yeah, good day, everyone, and thanks, Abhishek, for a generous introduction. And it is our pleasure, it's my pleasure on behalf of Mirae Asset to engage in this session on budget and related issues related to markets.
Welcome, Mr. Surana. And just want to point out one thing. When I used to manage family offices, one name used to come up all the time, which it was Mirae, because of the strong performance which Mirae asset has generated over the last, I think 20-25 years. So it has been a great journey for Mirai, and I'll just start first by asking that there has been so much anticipation about this year's budget. So what was driving it, and how is it different from any other budget in the past? If I say the last 10 years budget were more focused on supply side, uh, developing the infra of the country, social infra like toilets, water taps, and now this budget is more demand side. So, what's your thoughts? Hmm.
Yeah, no, you are right. I mean, I think each budget has a different context and certain importance. But before coming to what was the background or under which or circumstances under which the budget is presented, I think it's also important to look at a chain of events and the chain of budgets in terms of what is the approach? Are the assumptions conservative? Because consistency and conservative assumptions of whatever you make an assumption in terms of revenue targets, etc., deficit, fiscal deficit, will cover that in detail, leads to credibility. So I think the credibility of this sort of regime of the government clearly on the budget exercise has been excellent because most of the other assumptions have been very conservative all throughout, and we'll touch on that and the numbers. But to your question, under what circumstances this budget is presented, I think while there are many, I will call out two. One is at a domestic level, we have seen slowdown in the Indian economy. The second quarter GDP print, which is the September quarter number which was released, came at 5.4%. It is more than 1 percentage point, or more than 1 percentage point lower than what we ought to be. We ought to grow at 6.5. Actually, potential is more than 7, but say around 6.5. Less than that is very unsatisfactory. Of course, there are many reasons because of elections, weather, etc. But be it as it may, there was certain slowdown which was happening, and it was slowdown was also percolating to rural consumption was already was recovering because it never had a bounce back post COVID. But even in urban consumption, there were clear signs of slowdown, and we are seeing in the commentary of various management. Let's say yesterday, Asian Paint said that they are seeing one of the worst period in last many years. So basically, there was a slowdown. That is worst part. Second is the context or the background has been what's happening globally. So globally, obviously, few things are there. China is slowing down, and more importantly, the regime change or of in US, and that of course has many moving parts. But there's a lot of anxiety that what will happen under President Mr. Trump in terms of tariff. How would it further impact growth, including that of various trading partners, etc. So I think domestic slowdown as well as global vulnerability were the two sort of backdrop. And in terms of just a summary, in terms of the achievement, I think it addresses two important objective. First is it addresses the, or at least make an attempt to address in a very bold manner the growth angle, particularly related to one cohort, which is we can call it urban, we can call it salaried class, but it is for everyone. There is a massive increase in income tax rebate. Anyone who is earning up to 12 lakh and salary 12.7 lakh literally has to pay no taxes. So 1 lakh crore has been doled out as a very directed measure to address the issue of what I mentioned earlier, some pocket of slowdown. And second, what it addresses is more to do with continuity, that it provides a glide path of fiscal deficit. So fiscal deficit, as probably I don't want to use many financial jargons, is basically what you earn and how much you spend. So excess spending over earning. If the government is earning 100 and spending is 105, then 5 is the deficit. So it gives a very clear-cut glide path of fiscal deficit. First of all, the whatever was projected fiscal deficit for FY25, which is ending next month, has been met. by margin, and the next year deficit number is kept 0.4% lower than this year. So if 4.8% is what the current deficit is, they have targeted a fiscal deficit of 4.4% next year. Importantly, the Honorable Finance Minister also laid down a path of जैसे बोलते हैं glide path for fiscal deficit for next 5 years as an aspiration or the target where they want the country and the finances to be. And what she has mentioned that by FY31, which is 5 years down the line, they will try to reduce the debt to GDP ratio, which again we can derive the deficit part of it. So basically, 4.4% fiscal deficit, reducing to below 4% in next 5 years, because debt to GDP, they want to reduce. Current debt of India is about 57%. They want to, central government debt is 57%. They want to reduce to 50% in next 5 years. So that's the second objective. So I think both on growth at a very broad level and fiscal consolidation, it has been achieved, because otherwise it's very easy to present a very welfare oriented budget or so, but then that would compromise the basic foundation or the macro stability. One of the most important foundation is not growth, but it's the quality of the growth in terms of fiscal deficit. So I think these two, considering the backdrop and considering what the outcome is, I think it's a very pragmatic, very well thought out, and a decent sort of budget.
Yeah, thanks, Nilesh. So one more thing, you touched upon the tax cut side. So let's talk about the tax rebate, which has been given to the salaried employed class after many years. Everybody's sharing it. So so all of us in the middle class has been looking forward to the tax benefits that has been accrued apart from the relief to the middle class. And how do you see it benefiting the overall economy and the consumption especially? Because if this tax rebate is not spent on Indian goods or in Indian economy, it doesn't make sense, right?
Yeah.
Because if the money is spent traveling abroad, if it's spent buying imported goods from outside of India, the multiplier effect which has been thought of might not be actually implied to our economy. As ED
Yeah.
of our ED in IMF, Krishna Murthy Subramaniam, said that this effect can go up to 5x if the consumption is 80% and 20% is goes to savings, but it has to be spent on Indian economy.
Sure, sure. No, so first of all, it's a very large number, 1 lakh crore, and it's not limited to salaried. It is for anyone who is earning up to 12 lakh income, as there is a rebate. Also, they have tinkered the tax slab. So those who are earning more than 12 lakh, they also benefit. The range of benefit is anywhere between, broad range is 4 to 6%. So if you're earning something, you are making 4 to 6% post the budget, which is 1st of April, you will earn more than that. So for most salaried or for many people in that cohort who are paying taxes, the savings is anywhere between, say, 50 to 80,000 rupees per annum, which is a large number. Now, and the total amount is about 1 lakh crore. Now, question is, where will it be spent? So basically, if you get more money, either you save it or you spend it, right? These are the two sort of way. Now, a spending can go into various manners. One can call it discretionary spending, or where you can spend on staples, discretionary, whether you're buying a auto or a consumer good, durables, etc. That is one. Or you can save it for future, or you can be now eligible for a larger amount of loan. So there can be multiplier effect. If someone is taking a housing loan, they look at your post-tax salary, and your salary, because it increased by 6%, all has been same, your whole loan eligibility. So there can be multiplier effect of getting higher EMI for the same thing. To your question, I think, see, the spending pattern would remain same. If you get more money, it's very difficult to say how much it would spend, but purely on this domestic and outside India metrics, I think I mean, the outside of India, what is on spent on leisure is very small amount. It's not a significant amount in the context of the GDP number which you are talking about, 3 lakh crore, 300 lakh crore. In that context, the spending is not significant outside of India. So it is not that just because you are getting more money, You will be spending going out on only on abroad holiday. You can do spending leisure activities here. And basically it's not that one time dole out. Every month someone is getting 60,000, basically you'll get 5,000 more per month, right? So generally I would assume it will be going more towards discretionary expense, discretionary, maybe high ticket durables or low ticket durables, can be autos, can be also spending towards leisure. And maybe Indians have a habit of savings. So there can be some amount which can be channelized towards either in the bank deposits or into markets and stuff like that. But I would assume there will be a multiplier. It's very difficult to say how much will be the multiplier. Only thing visible is in the context you initially gave a backdrop that this year capex has taken a backseat. It's not that it's backseat. It's just that the increase over the last 5 years has been very significant. From 1.8% of GDP on capital expenditure or infrastructure, government increased it to 3.1% over the last five years. And the absolute number were also literally tripling. So government, which is center straight, government bodies, etc., 9 years back, were spending about 6 lakh crore. Now it went to 20 lakh crore, almost 11 lakh crore through the budget. Now they have maintained that number. In fact, they have increased by 10%. 10% is our nominal GDP growth. 6% is real, 6.5%, and about 4% inflation. So they have grown the capex number at around nominal GDP growth, but maximum leeway has been given towards this consumption sort of thing. So it's not at the expense of capex. It's just that the percentage increase in capex, which we have seen in last 4 5 years, is not there, and there is a push towards consumption stability, which is the need of the hour. As I mentioned, some cohorts, some segments have not come out with COVID still as yet. So I think that is sort of the context. And all else being same, obviously it will benefit consumer goods more. I don't think it will go too much into staples. Staples मतलब जो आपके FMCG goods होते हैं, fast moving consumer goods, soaps, detergents, and all those items, basic items. One may do some small uh, premiumization. I mean, someone is using, let's say, a live boy may use Dove, something like that. Like some upgrading may happen, but that will not consume the additional sort of income. It will be primarily going towards discretionary items.
Got it. Got it. So initially, I think early 2000 we used to talk a lot about consumption as a key theme in Indian economy. Then we moved to manufacturing, and now we are again talking about consumption. So would you tell us the relationship between consumption and the apparent slowdown, which happened in the economy in the last few months, which was majorly driven by elections and extreme weather conditions, and how does this budget solves the same problem
Sure,
for the economy? Yeah.
sure. So consumption, see in India, if you take a big picture, a 10,000 feet view where the country is progressing, our per capita income is $2,500, which is very low. We aspire to become a developed economy in 25 years, but even if we become, let's say, in 10, 15 years, middle income economy, we are talking of $2,500 per capita going to 7, 8,000 in the middle income economy. And I think consumer on a longer term basis never slow down. It's just that there is cyclical slowdown, or there can be 2 3 years or few quarters of slowdown in certain segment. But at a broader level, it is not slowdown, because that's the most important factor why the country would grow at 6.5%. It's primarily due to our consumption demand, and that is driven by the beauty of the demographics. As people would know that we are the youngest population, the median age is 28 years. Our dependency ratio would remain favorable for next 25 years. We would be adding we'll need a crore jobs per annum for the next 15, 20 years. Every year we'll be adding so much on the workforce in the context where many of the economies, including China, is aging. And also along with that, there are many trends in consumption, which has nothing to do with budget or this year and how trends are. These are long-term 10, 20-year trend, where I said about demographics, you have more people joining the workforce, so they will also spend more, save more, and earn more, which will contribute to the growth. Second is the urbanization trend. As the urbanization is still under index compared to many countries. So as you move from semi-urban to urban areas, there is a growth. Then you have more women in workforce. Then you have proliferation of media, advent of gig force. So all put together, I will call it is a consumption part. And in India is a consumption-oriented economy. If you break up the economy between consumption, infrastructure, and net exports, our consumption is almost 70%, 65, 70%. That's why we don't get so much impacted by global noises, so much a global slowdown or very strong global growth or so. So I think that's a broader picture, and it never sort of slow down. Even if you see from a consumption companies, wealth creation prospects over the last 10, 20 years, they have been done very well. Infrastructure investment and all is separate thing. It's not at the expense of consumption, but I think consumption is the most important pillar of growth. What we are talking about is slightly near term. When you look at budget, it is addressing the current need. You can't take a 10-year view. So they have to look at if there is a slowdown and there is a cyclical slowdown, maybe because of inflation, maybe because of many other aspects, what happened during elections, etc. So you have to address that. That's why this push has been given so that you come out of the. It's not a structural slowdown; it's a cyclical slowdown. It can't be a structural slowdown because if a country moves from $2,500 per capita to 7, 8,000 per capita over a 10, 15-year period, that means for every income in you don't need you will I mean your basic needs are met. Essentially people invest not towards basic consumer staples, but they spend towards discretionary means what is you can do without that also. It's discretionary, and the largest discretionary item is autos, then you have consumer durables, then of course you have upgrading of many home improvement stuff, then you have leisure travel, and the multiple other aspects. Aspiration levels are very high. So I think consumption is a very powerful longer term theme. And this budget is just addresses the near term slowdown. And also, by the way, the other aspects of budget, which is we talked about fiscal deficit, is very important. And see how the world has moved post COVID. Most countries have increased their debt significantly. We are now below what we were in terms of closer to what we were pre COVID. Also, another point is fiscal deficit is when we said that next year is about 4.4 projected projected. The quality of deficit is also important. The revenue deficit is only one third, and two-third is capex oriented. So capex is also as a multiplier. If I'm spending money on infrastructure, and because of which there is a deficit by the government, it's a good expenditure. It will have a multiplier. But if I'm spending on interest and salaries and freebies, etc., it's not a good expenditure. So the revenue deficit within fiscal deficit is at literally all-time low at 33 odd percent. And why deficit is important even for consumption is because if you have a high deposit deficit, then you have higher borrowing and then you have high interest rates. The last point I would like to say is that budget should not be looked in isolation. There are series of events which took place, external, internal, controllable, uncontrollable. But one of the important things is most viewers would know that we would be starting most likely the central bank will start a rate cut cycle over a period of time. There is a policy day after tomorrow. Let's see what happens. But over time, it's just that because of global volatility, there is a bit of delay, but our inflation is under control. But there will be likelihood of rate cut. Rate cut is again more money in the hands of consumer. So I think if I have to club both, the government has done a quite big move, which is we can call it fiscal support, which is by the central government. Now it's the monetary, which is the central bank, will also probably do certain things so that you get lower interest rates, which would help support the growth and help mitigate the current cyclical sort of slowdown. So let's see how it evolves, whether it happens in this policy or its next policy. But I think a combination of these two would help come out of the slowdown or near term, and in the context of where the global environment is. And obviously, as I said, longer term consumption remains the foundation for very strong, sustainable, secular sort of growth.
Got it. So there has been push from the government to, in the sense, they want more money into the hands of people. But how are they managing retail inflation on that front? If you can just give a brief about
Yeah,
that.
see, very longer term, if you know, let's say one of the important reforms which were done, I think 2016 was formation of the MPC, Monetary Policy Committee. So they have enough, there's a committee which decide how, and there are various means of that. If you look at in India, inflation, see, some part is controllable, some part is not controllable. The non-controllable part is essentially to do with fuel and fuel, because fuel we import 85-90% of oil. So if the oil prices goes up or down, if it goes up particularly, then inflation goes out of hand, but that's not in the control of either the government or the central bank, right? Now, similarly, food is under control, but the seasonality of food is not under control. It's a perishable item. So if there is a bad crop, bad season, bad logistics, then the prices can one a 5% shortfall can lead to 50% increase in prices in demand supply because of the elasticity
Yeah.
of the input. So to that extent, I would say that if you strip off these two, then our inflation has been fairly under control, and in that context, our rates have can come down. Now the other angle is where global interest rates are. But net, if you go by the consensus view, and I think we'll get clarity day after tomorrow, there is a possibility that our core inflation is low, and in that context, there is a need for rate to sort of. And the RBI use various tools to control the inflation, the how much money to put in the system, whether through the liquidity support as well as interest rates. These are the various sort of tools which the central bank does to control the inflation.
Got it. So just to touch on 2 points which you mentioned here. So first is this budget also includes a 100 gigawatts nuclear energy mission. So do you think India is moving towards becoming a energy powerhouse, and will this create new opportunities in energy sector?
Yeah. So what happens now? So Abhishek, what happens in budget? Sudden announcements are made, and the media tries to analyze and double click on that. But in the big picture, there are many other things, right? We have been putting on a very massive path of moving towards renewable energy over the last almost a decade. And you are halfway in the journey, and that is moving very nicely, both on the solar as well as wind part. As far as nuclear is concerned, see, nuclear is a very longer term. A typical large nuclear plant, they are talking about evaluating the small modules of nuclear plant, which has been the trend globally recently. But large nuclear plants take a lot of time to build. So it takes 8, 10, 12 years sort of to build or so. But I think at an overall level, given the energy requirement, at least on the power sector, there has been thrust, but that has nothing to do only with budget. See, budget gives allocation to various ministries. And when you give allocation to various ministries, you make certain around announcement based on the requirement. And sometimes we try to pick it up and link it to the stock price, which it doesn't happen like that. Some announcement did not meet that the stock is good or something will happen like that. These are one of the many factors, one of the many 20, 30 factors which we have to consider.
Okay.
But yeah, to your question is towards energy. I think directionally government is very clear that incrementally, we have to meet our own requirement and a balanced approach, which a very strong thrust towards renewable energy.
Okay. Okay. So also on the agriculture side, this the government has introduced the Gyan framework, which is Garib Youth, Annadata, and Nari,
Yeah.
focusing with initiatives like the Developing Agri Districts program and the Dhanya Krishi
Yeah.
Yojana. How do you see these policies impacting rural growth, and if there is opportunities in the rural sector of India?
Yeah. No, so again, I would just say that let's not pick up few jargons words and link it as if there will be a very strong traction there. We have to look at it comprehensively. But yeah, rural. See, I will tell you what we touched on this consumption dole out on the urban side or salaried class, because most of the salaried guys are in urban areas. There were a couple of more points which were given benefits. One is on the urban side only. Those who have second home, second flat, or second home in Indian residents. I think probably it's applicable even for NRIs. We don't have to give tax. There was a tax on implicit tax. Even if you're not occupying, you have to pay a certain tax. So that concession is a decent concession from a real estate perspective. And coming to the farmers, one provision was there where there is a program called Kisan Credit Card, which is basically a line of credit given by the banks to the farmers, and government used to give 4% subsidy on loan. So if the bank is charging say 10%, actually the farmer used to pay 6%, 4% was borne by that credit card limit, Kisan Credit Card, KCC it's called. They have increased from 3 lakh crore by 60% to 5 lakh crores. 5 lakhs. So 3 lakh per farmer to 5 lakh per farmer. And the amount is very large. In the overall system, I think KCC book is about 9-10 lakh crore total credit under that scheme. So there is a massive increase there. So I think that along with other various programs like PMAY Rural, Pradhan Mantri Awas Yojana, and many other programs that are ongoing, Manrega and all, that is sort of maintained in terms of the overall thrust. Yeah. But resources are limited. So to that extent, this budget in terms of packing order, clearly the biggest highlight, which is that 1 lakh crore rollout for income tax, personal income tax.
So yeah, so we have covered the ruler and the energy side, and also the tax cuts which impacts the consumption sector. But now there's a lot of word about AI which has been going around the world, with DeepSeek coming in, Sam Altman, OpenAI. There are a lot of things happening in AI, and this government has committed to three AI centers of excellence and a deep tech fund also. So how do you what role do you see India playing in the global AI and deep tech ecosystem going forward?
Yeah, so this has nothing to do with the budget, but it's a generic topic, and it's clearly all of us would concur that AI is extremely big. Few decadal once in few decades, you get this sort of revolution or change which will improve the productivity. Now, how and who will be winners and losers is too early to say. What is India's landscape? And on that, again, it's too early to say. We, as you know, that we are the ecosystem is much behind in terms of whether it is chips. And definitely, when you have on that AI and all, we are slightly sort of behind, but there is enough and more efforts, particularly even on semiconductor. See, at some point, you have to start, whether it is own batteries or semiconductor, to develop a ecosystem 5-10 years down the line. And China here is very ahead. And even US, China obviously are very ahead. But China is significantly ahead on some of these technologies. I'm not talking about semicon, but I'm talking about, and we have seen DeepSeek what it has done, which has been an extremely big disruption, a big change, and in terms of how it has come up so fast. It's a cost effective. It's a complex subject. I don't have an authority. We just read what everyone is reading. I would say that a few things is that. It's a significant change which will have multiple repercussions, some positive in terms of productivity, most positives in terms of positivity. But at the same time, there will be few casualties to certain cohorts of job, a certain section of IT services, etc. But net, obviously, it's positive, and to that extent, it will help improve the productivity. What DeepSeek has done is sort of democratize, or is an attempt to democratize at large scale on a low cost basis, so which is positive for consumers. And there are other connotations related to how when these large systems would work, you need enough and more power requirement for data centers, etc. So there is an efforts and sort of by the government to stay abreast of these disruption. But I would not say that we have a right to win or we have reached certain data points that we are much ahead of that. We are just trying to be sort of understanding and stay abreast with the changes in the technology. Yeah.
Got it. So also on the fiscal deficit and also on the green energy side, which you touched upon, there was a removal of customs duty on lithium-ion battery scrap and cobalt signals. So do you think India is pushing towards EV manufacturing, and how do you see this play out in the overall scheme of things?
So we are pushing, but the progress is not so encouraging as yet. So you have to keep on pushing, and there has to be multi-pronged approach. You have to give concession, you have to give incentives. So as you know, there is an incentive called production link incentive (PLIs), and they
Yes.
have been rolled out, and they've been rolled out. It's been successful in mobile and set assembly and manufacturing in electronics. And even in EV batteries, EV is not EV batteries, but in EVs, of course, it's there in batteries also, but it's in EVs, it's been there. So all tools are to be used. As regards to the battery, as I said, the ecosystem is lacking. If you have to compare with China, they are many years ahead. But at some point, you'll have to encourage in that. So PLI is one. Protecting the industry through various trade channels is another, and also encouraging the use of self-made batteries, etc. Is so there is a multi-pronged approach. I think budget just touches on some of the aspect, but that's not the comprehensive aspect. There is enough and more thrust by the government on EVs. That said, in India, first is on the nature of the products. Basically, you will have first in percolating more in two-wheelers, certain sections of commuting, but it is a long drawn process. It is nothing to do with 1 year or so.
Got it. So which sectors are you bullish on right now after the budget? And as a Mirae fund house as a whole, which sectors are you guys bullish on?
Yeah. So the budget also coincided. We talked about urban slowdown or basically slowdown, GDP print coming in. So the earnings are soft for last couple of quarters. But that is one reason. And massive FI selling started from October to January. In January alone, we have seen almost $8 billion, almost 70,000 crore selling by foreigners, and that is more to do with what's happening in US, strength of dollar rather than only India. So two reasons of this selling of almost 2 lakh crore since October and 70,000 in only last 30 days, in fact, less number of working days, is more to do with dollar strength and also with the earnings coming slower than anticipated. So this was a context under which budget has been projected. I think what will happen is that we'll see stability in earnings. FY25 has been will be muted earnings growth 6-7%, but we'll see low teens earnings from next year. Now, in terms of sectors, I think because of FIA selling and also markets have corrected by 12 or 15%, larger indices 12%, some broader indices 15%. In that context, this was the context in which budget was sort of projected. So many of the sectors which had high valuations had become reasonable. So what we like is some sectors which have been just punished because of FI selling, and otherwise outlook is okay from a longer term lens. So banking is one sector which is reasonable. It has corrected. It didn't participate in rally when the markets were doing well, but it did participate in fall when there was a correction. So it has become attractive. So banking we like. We like consumer discretionary subject to valuation. Some of the segments which are rural has not recovered only for last 3-4 years. Earnings have not come. Mass retail, mass paint, home improvement, footwear. Those segments, the earnings have didn't come before post-COVID properly for multiple reasons, but the valuations have become attractive. So we like that. Subject to valuation, consumer discretionary. We also like healthcare. So these are the three sectors which we are overweight on. In general, we are seeing no sector which is very cheap, like dollar for 50 cents. So these are the three sectors which are reasonable or the growth visibility is good. But apart from that, also across sectors now after the correction, you are seeing reasonable sort of valuations. So what we are seeing effectively, just to conclude, and maybe not part of your question, but I'm just to give a view on equity markets post the correction. I think we are positive, but three things I would like to say. One is keep expectations low, which is a 12 to 15% constant currency returns rather than what happened in last 2 years, which were very high. Second is keep time frame 3 to 5 years, which is always there in equities. Returns can come early, later. We don't know always. And third is to invest in a staggered manner because no sector is very cheap, but nothing. I would not say at an overall level market is less than 17 times FY27 earnings, so it is reasonable. If these be the 3 points that you are expecting 12-15% return, you have 3 to 5 year time frame, and investing in a very disciplined manner, then the Indian markets, I don't think will disappoint. And there are enough and more sectors to invest, but best is to invest in funds which are across sectors rather than one particular sort of theme or so, because there is no large divergence between the valuation of various sectors.
Got it. So from an allocation perspective, should NRIs rethink their post budget allocation? Should they move from large cap to mid cap or from mid cap to basically the allocation between equities across market cap?
So I would say that there are funds which are slightly more flexible, and then you leave it to the fund manager. So there are funds like large and mid cap, which is a very good category, flexi cap, which invests 60-70%, or multi cap, which invests 50% in large cap, because large cap is slightly cheap, is slightly more attractive because they have burned the burnt of FIA selling. That's why they are cheap. Only point I would like to say that in India, the opportunity, choice, character, scale of mid and small cap has changed big time in last 5 years. Because large cap is 100 companies, was 100 companies 5 years back, and now also 100 companies. Whereas we have seen so many listing happening, so many new companies, existing companies have got bigger. So many of the yesteryear's large caps are actually mid caps because not everything can get space in top 100. So I think mid and small cap should have a decent uh, uh, portion in the portfolio only because of proper representation across businesses. In that context, the best category is flexi cap, multi cap, large and mid cap. These sort of funds where you have 50 to 70% large caps and remaining mid and small caps.
Got it. So, great insights. How would you rate the budget 2025 out of 10, and your key conclusions on the same, just to wrap it up?
Yeah, yeah, no. So who am I to rate? We are small guys. We are reading that. We should not. We are not. I can't be. I mean, there's no point in sort of rating something as important, as serious, and as
Hmm.
a lot of backend has gone on that. But as I will conclude with my views, what I started with that. See, as I said that. Uh, uh, if you are conservative, which we didn't touch on that, conservative means the nominal GDP growth assumption was 10%, revenue growth, certain assumptions, everything was decent except for some disinvestment and maybe personal cut tax. We didn't touch on the math, but overall the budgets have been conservative. So if they are seeing certain deficit, you are meeting that, and you are consistent. So that gives a different connotation and credibility to the budget exercise per se. So I will score the budget very high on credibility. And that is also important not only from deficit, from country's rating point of view. Our last rating was done in June 2020, I guess, and there is a scope for rating increase, but that is a contingent of how deficit are met, what is the assumptions and all. So to that extent, I think budget has been very pragmatic. Absence of no negative news is also positive news. So there was no large negative news in terms of capital gain tax or anything
Yeah.
else. That was positive. Big rollout has been done, and it doesn't stop there. There is a role of monetary policy. And so I think it's been better than what we would have thought a week before.
Okay. So yeah, thanks, Mr. Surana. This has been a really incredibly insightful discussion on the budget, and to understand different sectors, and to see which sectors is just jargons, and which sector is actually which might be executed in the next 1 or 2 years, which we can see as a possibility, and to keep a conservative mindset with the Indian economy, and to grow with the same. But thanks a lot, Mr.
Thank
Surana,
you.
to attend this, and it was genuinely amazing to understand from the top stalwart in financial world. I've heard a lot about you, and everything makes sense now. So thanks a lot.
Thanks,
And
Abhishek, for those kind words. And it is thanks to your audience. It is my pleasure and our pleasure to interact with you. Thank you very much.
yeah, thanks everyone for joining, and see you soon on the next webinar. And we'll share a insight report with you on budget, and as spoken with Mr. Surana also. And feel free to reach out to us for any guidance. And thanks a lot, everyone. Yeah, thanks a lot. Bye bye.